Okay, how are we going there, guys? Welcome, welcome, welcome. I might just blab on a bit before everyone's up and running. G'day, Paul. Anyone home? I don't know if you know if anyone's talking. Yes, they are, but anyone home? Who knows? Hey, McFly. All right. Let me know if you can hear me loud and clear. Just to make sure I had my coffee. Can't start talking without a nice little coffee in front of me. All right, I'm pretty sure I'm coming through okay. Fantastic. No worries, mate. No worries. Hope you enjoyed yourself. It's good. It's good to get away every now and then, isn't it? Who wants to be sitting there going away and then listen to my ugly voice? Fantastic. All right, let's rip into it then. Welcome to Trade Setup in the live stream. It's the 3rd of May. I know we might have a few more people in there. We'll be coming in a few newies. So if you are new to the live streams, just on your screen there, you can see if you can join us on Twitter. Follow us on Twitter in the top left-hand corner. You can follow us on Facebook. I'm not as active on Facebook. I don't think that's the greatest medium for things. It's more just we got one there for the hell of it, I guess. But the most important is subscribe to us on YouTube. So anytime we do go live with a stream or any sort of do a couple of FX videos, we pop up every now and then. I try to do I call it the weekly FX video, and I do it monthly because every Friday I tend to run out of time or start getting myself a bit busy or whatever it may be. But if you do subscribe to us at our YouTube channel, you'll see anything that we do pop up. It'll come to you, or you should get a notification from YouTube anyway, saying that we go live or something's been posted, whatever. So yeah, and we got our general advice warning for anyone that hasn't heard me rant on about that before. We only give general advice, so I don't like to think that anyone's taking what we say as gospel. It's like I said, it's just me voicing my opinions and explaining what I'm looking at. Um, yeah, there's no personal advice involved. Right now that we got that out of the way, the markets. What a cracker of an open, really. Um, don't know too much to say about that. I'll get this window closed, and then we'll get. Sure, I got the right one up there. Okay, that's the screen's all fixed. So yeah, good open. I didn't expect that, considering the US. So we're going to have a bit of a. I want to focus more today on the XJO, the ASX200, and just go through that. We've been speaking about it, obviously, most days. Not a lot's happened, but the last few, well, most sessions. Sorry, but not a lot has happened the last few days. It's really started to spike up the last few days quite hard, and I think what we'll get and what we probably have been getting the last few days is a bit of, we call it FOMO, fear of missing out trading. People running it higher, but you've got to take that in. You've always got to be, this is just on the daily chart anyway. It's looking stretched up there, but what we'll do is refer back to the other charts and say why we'll look stretched or not stretched. This thing could just keep rallying hard and really catching people off guard. I mean, if you haven't got into the market now and you're waiting for that pullback, there could be a lot more FOMO down the track if you see that it breaks and just does not look back. So we'll have a bit of a recap of the ASX, and I'll shoot out some levels, show what we're looking at, especially the monthly. I know it's a big longer term one, but the setup that we're seeing on the monthly at the moment is prime. I think it's an ideal setup for bulls of what we're seeing now on the monthly. And if you had that on the daily chart, day in day out, I would trade that type of setup on the daily or even intraday. It's just a beautiful setup. I think it's dependable, and it's playing out on the monthly at the moment. So that's why it's good to have a context of exactly what's happening on the daily, the weekly, and the monthly, just so you're not going to be left on the sidelines. You've at least got some risk to the market when it's going like this. Um, so yeah, we'll be cracking on with that. So the US last night, yeah, didn't do a lot. They were actually down, and that was, if you go and look at the charts, it was just after what is it, the FOMC meeting when they left rates unchanged. Um, I think that wasn't the kicker. The market was actually, I think it opened down lower than the previous close, and then rallied back up to match the previous close. By the time it got there, it was somewhere before the FOMC meeting, and the FOMC come out, and it did get a bit of a kick up just after that. G'day, Danny. How are you, mate? Did get a kick up just after the news, and then I think what the Fed Reserve is looking at in the US is more the numbers haven't been super strong, so they're potentially happy to let it run above 2%. Normally, your reserves are looking 2 to 3% inflationary, then they start pushing up interest rates, but they're happy to leave it plugging away above 2% for a while. So I think a lot of people think, okay, it's above 2%, they're going to be raising rates potentially faster than what we expect. But instead, they're turning around and saying, look, it is above 2, but we are happy with it just there at the moment. So I think that's good. That's longer term, that's actually good for shares. You're getting growth. They're not raising rates. They're not crimping borrowing and debt costs and all that sort of stuff for corporate earnings down the track. But then good old Trump or someone's come out and pumped something, and then the fear of trade fears with the US and China have come back on board. So it was somewhere around 4:30. It just dropped like a stone, and then we got the market was down, not super bad, as in we didn't get a 400 or 500 point sell-off, which we've seen in the past. It was a good solid 160 points or so, I think, on the Dow, and a good little sell-off on the Nasdaq, and not so much the Nasdaq, but mainly the Dow and the S&P, the broader S&P. So yeah, after all saying all that, the SPY, where it closed around 4, where the ASX closed at 4:30, where the SPY was trading at that time, the SPY futures, they ended up pretty much back at the same spot. So I would have expected today to open up flat on the ASX. Instead, we gapped up. We're opening up 40 points, I think, on the ASX200, and we're powering along. So that it's sort of leading me to believe that after the last few sessions, there's a bit of FOMO. Your retail traders jumping in on the open there, giving the index a good nudge, stocks a good nudge, and it's kicking higher, which is great. But I'm always cautious. I mean, I'm not fully loaded. We've got about 5 shares going at the moment for our alerts, what we do. We've got 5 positions. We had a currency position. We got, funny enough, got stopped out with that little pop yesterday on the Aussie yen. Made probably about 11 points. I think we made. I can't remember now. I think we made 11 pips, which is not too bad, considering that we made on the euro. I think at the alert before was 120 pips, so it did quite well. Probably that was a bit too greedy on that one, but yeah, that we got stopped at in that. They brought it back to 4, and then we've got our 5th one, our short on today that's just ticked off, which is quite good. That's actually up, considering that the market is going up. We're up 50 points on the ASX. It's looking quite good for the short because that triggered, I think, today after a sell-off yesterday, and it sold off further today. So that's on Nick Scully. So not looking the best for them considering the power of the market today. So it's pretty much going the opposite direction. It's good for us if we're short. And yeah, the others are still kicking along quite nicely. What else we got? BPT 164. Never remember where we got in. I'll have to let you know. We're in at 132, profit partial at 140, and now we've kicked on another 20 something cents. It looks the partial exit looks stupid in hindsight, but SM1 same 714 entry, and that's now it's 956. So that's kicking along really nicely. And our others are Whitehaven, which has gone. It's actually up. We're in the green today, 6.5 points. That's gone along quite nice. Then we got BOT, which was a newie I think it was yesterday, 14.5. It's 14 now. So I'd like that to kick on. The structure looks great on that one. I'd expect that to start spiking hard, so that could be a really good little gainer for us. And then we got Nick, the short. So we got a bit of we're taking a short just to make sure that if the market does roll over, I mean, it's a good setup. It's worthwhile. Just if we do have a bit of a pullback from here, that's probably going to kick on quite nicely. And I think the other ones have been so strong they won't get hurt too much. So yeah, that's the positions we got. So what we'll do is we'll just have a bit of a breakdown of the XJO. This is your daily chart. So what I wanted to talk about, we've spoken about the weekly in the past, and we're expecting it to bounce around this level. The weekly trend was up. We'll draw that in a minute, but I just wanted to point out the way I'm looking at it and what I'm seeing, all that sort of stuff, just to make sure that you are putting in the context what we're seeing now. So if you're a bit of a bear and you're sitting on the sidelines going, oh, we're overextended at the moment. Yes, looking at this chart, I would say that we are. I mean, I like to look at it like that. The power of buyers to sellers, the buying pressure has pushed us right up. So whether or not there's more buying pressure to come after this big move from pretty much 57.25 up to where we are, 350-point rally, whether there's more buying pressure to come to blow us through the highs, I think that's a low probability answer. I'm expecting more of a bit of a reaction off that highs. But in context to the bigger time frame charts, it could easily just hover. I mean, we've seen that around here when the market's pushed up from oversold to overbought. Up here, we got to about here, went sideways as it eased off, and then boom, we get that extension up through 6,000 level. And that was the first time we broke that thick 6,000. And then it was a bit more controlled after that as we sort of got those swings between buyers and sellers, but it was biased up until we got this lower high here. And that was pretty much when the US got smacked, sold down, and we've held lower highs since there. But it's all it really did was work back to that longer term weekly trend, the weekly uptrend. So I just want to point out what we've got and why it's really prudent on times like this. And what we're seeing is just to have a bigger time frame. You know, look at your bigger time frames as well. There, long play, yeah, good work. Just saw your notes there, Paul. We'll go over that in a minute. Have a bit of a look. BSL 17. Woohoo! So we'll just want to mark this up. So I'm expecting the way this has gone near vertical the last 5 sessions, pretty much boom, straight up to 61. I do expect a reaction there. It doesn't mean that reaction is going to be off 61. It's going to be right at those highs, and we'll draw that up. I'll take the actual screen snapshot. This is just breaking it down. You know, you've got to have an overall bias of what the market's doing, and obviously you don't want to get caught if you are being bearish. You don't want to get caught, I guess, with no positions. This market powers on, and what you got to remember, the markets generally, what they do, they like to do, or what they tend to do. Everyone's buy short. You can pretty much bank on the market going higher, because if everyone's buy short, they keep jumping in short, get squeezed out, jump in short, get squeezed out. So it just means if everyone's buy short, you've got to think of it. It doesn't mean it's going down. It means that if everyone's buy short, who's left to push it down? That's the way you sort of got to flip your mind around and think about it a bit better, or think about the overall market. So I think if there's 10 people, um, say 10 people trading the ASX, 9 of them buy short, one's not. I mean, how much effort can that last trader put in to keep the market going down? But just think, if that one person wants to buy and he starts buying it, everyone who's loaded short, it's enough energy if they get it wrong, the market to turn. And then all of a sudden you've got 9 people having to buy their positions back and getting squeezed out of the market when it heads back up again. All right, so that it just means that you've got to look at sort of the weight of numbers, and with this sort of recent turmoil in global markets, the trade problems, you've got the tax, all these sort of negative aspects, rising interest rates, sort of crimping the US, they've all worked its way through, and then that's pushed the market down. So everyone was getting, the bears are coming out. Everyone who might wanting to buy has just sort of been sitting on the sidelines, because if you read the news too much, of course you're going to be biased down. They're all doomsdayers, and that's all they can do. They don't trade. That's all they sort of bang on about, and that's what sells papers. But in reality, it's not what moves markets. So if you had that sort of bias there, everyone's starting to load in short. All of a sudden, you can see this move, and it's squeezed them back out, and we're starting to head higher. So really, what we're trying to look at now is just to see where it could go to, and what our overall view is. So if you start marking it up on the chart just to get some levels, you know that, okay, we are starting to get a bit, probably the last couple of days, we've just broken this downtrend. Although it was very well contained, you can see that it was quite broad too. It's just gone boom. The last 2 days, it's just broken up. So we're now obviously heading higher, but are we stretched? What would we expect? I'm more expecting a bit of a reaction. I'm expecting a reaction up here because of being so overbought and so extended. Just on the daily, it doesn't mean we can react. So I don't care if it's reacting sideways or down. I just want some sort of reaction, a bit of heat to come out of the market. If it starts chopping and we get this type of price action going sideways, that's actually very strong. If we do get a bit of a pullback and we get your 2 legs down, and then, okay, well, I might draw that a bit clearer. Whoop, draw that up. So we're looking for a reaction is off that resistance, and this is just on the daily. All right, so what we've got, the market's popped up, and you've got your lower highs in play. What we can get, and then we've got this recent boom straight up to the resistance. What I would expect is the market to either pop through, just stop in a few traders above the highs. You're always going to get those traders are going to put a buy on stop above the market, expecting just to kick on, and then they're the ones that can get popped in. The market couldn't stop, like it did when it got up through 6,000. That back off we got here. everyone, it was a key level at 6,000. It's popped up only a few points. Then we've retraced, probably squeezed them back out, and then it's gone on with it. So I can expect some sort of reaction after a break up through there, and get this, and then hold a high low, look quite strong, and then go. Or we can just pretty much reverse off that level. Or before you start, you pull back and you start building it, maybe 6,059, say, and then the longer term time frames take hold and boom, up we go. Or the alternative is that we pop up here and we chop around here. We do a bit of this type of price action. It gets a bit washy, but it doesn't actually go anywhere. It's held in a very tight range. As you see that, then you might get this just sharp bang and off we go. We're off to the races again as it sort of consolidates sideways and then goes. And that way it could, the way I look at stochastics, selling pressures coming in, they're heading from overbought to, tending towards oversold, even around that 50% mark. So selling pressure's coming in, but it's holding up. It's holding around the highs. That would be nice to see that. I mean, any one of these could lead to another big run, but that's pretty much what I'm looking at just in context of this daily chart, purely because we are getting overcooked up here. And you expect someone to take some sort of profit up here, whether it be after a breakthrough, right off the levels, or they might just start to be easing out of positions at 61 to 61.25. Who knows? So what we do now is to get a bigger view is just taking it back a step to the weekly. And the weekly we've drawn up, that weekly by no means is overcooked at the moment. It's only really going from oversold with the buyers started stepping and really ramping up the pressure, and it's ramping up to 61. So looking at that, this is why you've got to, I guess what I'm trying to say, you've got to have some sort of plan. You've got to pre-plan. You can't just wing it. You can't wing the market. You can't just, I'll get this back up. You can't just have a plan on the fly, if that makes sense. You've got to look at all your charts and see what potentially could happen. Okay, if this is, I'm looking at the daily and go, okay, no, I think the daily is a bit overstretched. What am I going to do if if it starts going sideways? Starting to go sideways when the sellers are starting to come in, they're taking profits, but it's not actually going down. It's just going sideways. You go, that's a sign of strength to me. And go, what's my plan of attack if that happens? Okay, what's my plan of attack if it breaks up? Am I going to jump into some more stocks, or am I going to really try to look to refine it from a daily chart? Because I actually think this weekly is looking good. And if you go to the monthly is the key one, I think, at the moment. So this is what we've been looking at it for quite a while now. This rising support, you've got your anchor level at 56.50. That held up. We did have a decent correction lower where we're heading back to test that anchor. But what we've been talking about for a few weeks now is really to see if it can hold up at 57.50, and it's probably only just recently, if we were going to get that lower high come into play, test back down, or what was going to happen. But now we've seen the last 2 days it's blasted up and through. So now the plan of attack has got to change slightly. And we've got to now look towards the highs and see what sort of reaction we get at the highs. Are we going to load the boat thinking it's going to go through? Are we going to wait to see if there's a bit of a reaction? We might edge in a few really good stocks, good looking stocks. Like we're always happy to. If the chart looks good even though the daily's looking stretched on the ASX200, doesn't mean the individual chart itself or the particular stock can't look really oversold and ready to cook, ready to fly. Does that make sense, guys? And then you can just jump in, but it doesn't mean going and picking randomly thinking this is going to go up, because you could easily, if you do run your stops, you could easily jump into something. The market does pull back on the daily, spends the next few weeks consolidating, and then you can either get stopped out or behind the eight ball quite a bit. So you really would just want to take, until it is trending higher, you really just want to take those prime entries. You really got to have some sort of exposure in this sort of market, the way that the weekly chart's going up. It's just the daily that could be coming into some sort of resistance and may get some sort of reaction off the 61.50 zone. But the weekly, you can see the weekly stochastics, that buying pressure hasn't, there still could be a lot to go. So if that's going to get to that 90, say when you're looking at it overboard, it gets up towards 90, it could easily just blast straight, not even look back, straight up through, get to 6,300, and then have that sort of minor correction and ease off a bit before it starts, continuing that move higher. So really looking at that weekly is a great chart. It's up and running. It's off to the races on that. But if you go back one more step to the monthly, this type of setup here, that's prime. You can see that those higher lows have been holding. I'll just draw that up. That's what we call that inside continuation pattern. So what we've had our run up to here on the ASX, then we've had that push down, and then since then we've really just held beautifully. Longer term, we keep reversion to the mean, reversion to the mean. So every sell-off, we start buying in at higher levels. So if you extrapolate that out, which I think we've done this before, from that low to high. So this was your weekly move up, another weekly move or monthly move up. I'd say that. If you extrapolate that out from this low to high, and you take it from this most recent pullback, that's your pullback, extrapolate that out, that would take you to these highs right up towards 68. So we could easily, with this monthly chart, not look back. The weekly just continues to make high lows in the weekly, and off we go, all the way back up to the highs, break into new all-time highs, and then off we go. So there could be a lot of fat left in this market still. Does that make sense, guys? Just try and what I'm trying to get across. Not be too biased by one single chart. You really got to have your overall view. So I'm obviously, if you're looking at the three charts, monthly I'm biased up, weekly I'm biased up, daily I'm not so much biased up. I think it's a bit stretched. I want to see some reaction, and then hold another higher low. And then I think once you've got the three in your favor, then you might want to get a bit heavier into your portfolio, for instance, and you're picking those really good prime setups. Does that make sense, guys? So that's my little rant for a while. What's everyone else's views on what's happening at the moment? I just want to test, see if that's 48. What have we got here? Somewhere around 4,000 to 6,000. You take 48 to 68. So yeah, that could even. So this monthly chart, just going back to even the weekly, you can see this high low. That's the start of the monthly leg up. This hasn't broken. Pushed up, pull back. Even with this lower high here, that was your anchor. I just want to draw that up just to show you the key, the beauty of knowing where your anchor levels are. And your anchor levels mean anchoring the trend higher. So you've got this up, pull back, higher low, higher high, higher low, and then this is your anchor at that stage. All we did here, this is I think the elections. We made a lower high, bang, straight down, touched pretty much to the T, right to that support, to the anchor level, and then we didn't look back. And then we've had that pullback, consolidate through here, and that's your higher low again on your weekly basis, and then boom, up. So pretty much your higher low was right down around 56.50 at that stage. We've had that leg up. And on the daily, yeah, you're going to get lower highs, lower lows on the daily, but the weekly, that's just contracting into the weekly uptrend, 56.50. We've got all this mess, and we're starting to work our way back out of that mess at the moment. So this here, if we get up through, which could easily punch up through 61.50, yeah, away we go. We've made another high low. It's confirmed. It's pretty much this high low at 57.50 is pretty much confirmed now, with just the fact that it's only a few points or percentage terms. It's only a few 1 or 2% away from those highs. All right. I hope that made sense. I think enough of me banging on about that, but I think yeah, everyone's got obviously different opinions on different things, but I think it's worth, like I said, just going through the different timeframes, setting out your plan of attack, because the last thing you want to see is this market, or the last thing you want to do is short into it and find that you're the one getting squeezed out. The second last thing you'd want to do is miss out if this thing just keeps going. If the daily does not look back and just powers on higher, or I think that's unlikely. I think at some stage you're either going to have a bit of heat coming out of the market, whether it's consolidating sideways, a pullback, whatever. But you've got to really have your plan set out. What are you going to do? How are you going to tackle it? And then, I guess just execute your plans. Which one's starting to play out? Which plan's starting to play out? And start trading off the back of that plan, which you've done in advance. All right. So that's it. I think there's no questions, just something we're banging on about there. I think everyone's probably bullish by now. Just trying to kick on. Not much to talk about on what we've got. That's still going nice, but I'd like to see that. I want to see that start to take off. That would be good. Pretty much that's it for us. Gone through our shares. What else have we got? Nick, 68. So we're short from 670. It's now 668. What do you have, Paul? What do we got there? Linus and VSL. Let's take a look at those then. All right, guys. So we just had a little pop. We just popped about 10 points. So There's one thing, I mean, I don't like. I don't like when you extend into a level. And this is the one thing that's got me thinking twice on the daily. I mean, if I would buy some stocks here, continue, especially if you're looking at it, think of it this way. If you're looking at a share that's been continuing up, it's been going up, and I'm just trying to draw it. I hope you can see that. Can I see that? Yeah. So you've got this, the market head up, it's retraced a bit, and it's got that secondary leg up, and you're looking towards getting in somewhere around here. Say this is the daily chart, the weekly, whatever, but you're late into the trend. This is where I probably wouldn't want to jump in late into a trend. I'd ideally be looking to something that's trading around this spot. It's the first signs, the market's coming out of contraction, it's contracting low, it's starting to head higher again. You've got your first pullback, then looking to enter, maybe your first pullback in a weekly, you're looking for a daily entry. You're nice and early into that potential longer term trend higher. But if you're looking, I don't, that's okay because that's probably a prime setup. If you're looking into the daily, if you're looking at something now at when we're trading around 6,100, prime setup. But I think if we're going to react, if I'm right, and we do start to react lower off 61, 61.50, all that zone in there over the next few days, a few weeks, react lower off there. You don't know where we're going to go to. Don't forget you're going to have the weekly and the monthly charts going the right way. So sooner or later it'll pull back and start to kick off again. But you just don't want to get into something late in the trend up here, and then all of a sudden the market, the ASX drops, and then you just got chipped into a stock. It's popped up a bit more, and you go, oh great, and boom, then we get a bit of a sell-off. Or this one, because it's had such a good trend up, it has a good sell-off, and then you're caught either getting stopped out, or again something that goes into the long-term portfolio, which we're all guilty of. I had a massive long-term portfolio as I was learning. All right, so we're Paul's. What was yours, Paul? BSL. We'll have a look at BSL. That's going nice. So I know you got into that nice and early. You've had that for a while, haven't you? But that's kicking off nicely. Not much to say about that. It's just doing its thing. I mean, you can see what we're talking about when you're overstretched in a market. That could stay overstretched. So it's just something to bear in mind. You will get reactions. Like I said, a couple of day reaction that's turn around and head higher again. So it's just to make sure that nothing just goes in a straight line up without some sort of reaction, some sort of profit taking. Yeah, this one BSL is going really nice. What else did you have? Linus. I remember I was looking at Linus for a while. I think I completely missed this entry or this zone just in here to buy off, and this would have been, for the way I look at it. I'll draw it up. It's handy drawing up the entries, and I like blue. Don't like the arrow. All right, so at that stage, what you had is, if you're just looking at, say, around here and the market's okay, it's popped up with what we come back down and retested the anchor level, made a lower high, squeezed out a few, but then it's just turned around and went straight back up through the highs into new highs. All right, so that's quite a strong sign. So what you'd be looking at after that stage, you got this sort of move, add a little pop up here, and then continued lie. You pretty much come straight back into that zone again, that same zone. What was that, 180? And then we'd started to head higher again. So the way I basically draw it up, and I would be looking at entry. So I'm looking for signs of strength. What we've done is we've come off the support. At this stage, this is your downtrend from the highs. You're looking for your downtrend now. If it reacted off here and just went boom straight through, you don't want to, this is why I don't like to buy, sit on the bid, we say, just sit on the bid, put an order in below the market and go, okay, buy it here. My stop's going to be, I don't know, 50 cents below that. That's going to be, you're always, when you're wrong, you're always going to lose. And you're not on the right side of the market, because the market at that stage, at these candles just in here, these green candles, the market is still heading down. What we've just been through, okay, showing signs of strength, but it doesn't mean it can't fail. All right, so at that stage, I wouldn't have been looking to buy just yet, but I know that I know what I want to look for, and eventually it did play out quite nicely. You got this pop up out of contraction, so that's your contraction lower. It's coming to a major support. Buyers have stepped in the gear to protect it. stepped in there again to protect it. It's popped up, and then you've got a couple of red candles. So you can obviously, this would have been a nice little entry with the move up through, I think it was around 210. Took a little bit of heat there, but then it just kicked off. So that was a nice entry. You know you're on the right side of the market. When the market's starting to lift, it's coming from contraction into expansion. So when we say contraction, the market's going up, contracting lower. We want to take a trade, always looking to take a trade when it's going into expansion. Expansion's back up again. All right, so you want to take it, and that means you take as little heat as possible. You're not wasting your money. Oh, beautiful, Paul. You're not wasting your money, as in your money could be better put somewhere else, and meaning that if you buy it, say, I'm just trying to, it's not really a good example on this one, but if you buy it, the market goes sideways, consolidates between a range like this, and you're buying it in here looking for that move higher, and it doesn't do that, you could sit there wasting 6 months to a year with your stock doing absolutely nothing when you could have put that cash to better use somewhere else and made some gains from it. So that's why I'm always looking for those. I'm happy to give up a bit, always looking for those entries where the market's starting to lift. And if it doesn't lift and you're wrong, okay, I'm probably going to get stopped out, or I'd close myself out purely because it didn't work out the plan. I'd rather be on the sidelines and use that cash somewhere else on a better performing stock or something that is going to give me some sort of return. So everything's about return. It's not about being right or wrong. It's about return. Um, the more return you get, the better, more consistency, the better you're doing, the better return you're getting from your money. But if it's just about being right or wrong and you're holding it because your ego is saying, I want to be right on this one, um, you may not look, you may be right, but you may have sat in it for, loaded to the hilt 6 months. Your market's done, the market's gone up. Your stocks, particular stocks you've traded, have done absolutely nothing. Yeah, you're right. Good on you, but you've made no money out of it. So that's why I'm always looking for these types of entries. And that for me was, nice little zone. You bought it. We've come off contraction. This support zone is proof that it's holding. We've even got that little washout before we bust it straight back up again. We've come all the way back down, retested it. So if that was a weak market, should have gone down. Instead, we've popped up. So what's happened? Everyone's been watching this, and it started dragging some buys. You only got 3 days, 3 red candles basically before it started lifting again. The entry was triggered. Your risk is minimal, and then up she goes. And even today, it's still going strong. So that's a cracker. All right. So what do we got here? Linus, is it not long term? Yeah. No, it looks good. You've done well on that, mate. What else have we got? All right, John, your APX. Has anyone else got anything they want to chuck in there? Don't worry about short-term technicals. Yeah, true, mate. I mean, if the company's doing well, that trend won't break. That trend will continue to head higher. If it's great fundamentals, if the market does roll over, doesn't matter what the fundamentals are, people are selling it and don't want to hold it anymore. So yeah, it's a good. Like I said, I always said you've got to have a blend of both. You can't just sit on one side of the fence, fundamental or technical. I think you've really got to have a good blend of both. So when you're into something and it's got some really good fundamentals, technicals are always going to refine your entry, get you in at the best spots, and then you're sticking with your fundamentals to get that longer term appreciation. So basically, when something is looking strong, good fundamentals, you do have these little pullbacks, but you don't tend to get the major contractions lower. You tend to it just goes on nice and strong. I'm trying to think of one. What was, oh, there's one I've been watching, TWE. Look at that. That trend's beautiful. Right back from 2015, it's just been trending higher week by week. So that I don't even know what the fundamentals are on that one. I mean, like I said, it doesn't bother me too much because it is looking great technically, and there's no reason to be getting out of that yet if you held it. You got these minor pullbacks, minor pullback. The weekly trend anchors holding every time, and up she goes. Looks great. All right, what do we have, John? APX. Right, I'll get onto APX now. See, that's looking good too. Okay, I know we've been looking at this one, and it was probably an entry. to be honest, this is what probably a bit of a downfall with my trading. On my trading style, I don't. Um, I'll explain what I'm talking about. When I'm looking at this weekly chart, it's headed higher. Boom, it's going quite nice. Um, what was I going to say there? Yeah, the weekly. Okay, it's going really nice. You've got these little pullbacks. You've got the market. Okay, market started to grind higher. Had a bit of a contraction lower, and okay, popped higher again. This is way back in 2017, mid 2017. Started going higher. Started getting ahead of itself. Had a bit of a pullback. Built another higher low. Off she goes again. Bit of a higher low here. Pop up. Had a deeper pullback to build another higher low. So really, that trend is still going higher. I mean, nothing to worry about there. For me personally, I find it tough to buy into something that's been going up for so long, because in the back of my mind is always how much, um, or the way I trade, how much meat is still left in this move up. Um, yeah, even with good fundamentals, sooner or later it's going to be overvalued unless they just keep performing. I mean, they could keep performing, keep grinding higher, but I would love to have got in somewhere down here and then riding it higher. Then I'm happy just to leave it open, but to jump in, it's always been tough for me. I've always found it mentally tougher to jump into something that's had, or what I would term a lower probability trade at you as you towards the end of a trade, end of a potentially end of a run. I know it's second guessing, but that's pretty much what I look for. So looking at this entry, in the back of mind, I'm looking at the weekly, thinking, yeah, look, it's gone quite hard. It's gone quite hard. So how much can I get out of this trade? I mean, I could still make 10%, 15%, but I'm always looking for those other ones that may on the weekly have had a bit of a run up, looking to pull back on the weekly, and then you're looking for the next stronger leg up. So I'm looking to go from a weekly contraction into expansion, not just a daily contraction into expansion, because this is just daily contraction lower, but on a weekly basis, it's just a pullback. It's not contraction on a weekly; it's just a bit of a pullback on a weekly chart, and then it's going back into expansion on a daily, which is continuing higher on a weekly. So good little entry. In saying all that, that entry, nothing wrong with that. It was a cracker, and it's working out so far so good. Where are we? ComSec, we'll look at that. SRG, GEM, and NTU. ComSec, how are they going, by the way? Commonwealth Bank, going nicely. I heard someone say when I was getting a coffee today, it was on the news popping up, and it's like they said, ComSec, Commonwealth Bank have gone bugger it. We're just going to say everything that's gone wrong for us. We're just going to say it all in one hit, put all the bad news out there in one shot, let everyone digest it, rather than edge it out, say one bad thing after another, which could really hurt your share price. Just say everything in one hit. It's like every day they're coming out. Oh, by the way, we've done this. Oh, by the way, we've had problems with our reporting. Or by the way, so yeah, it's quite interesting. Yeah, so this is your little entry through here. You've got okay, we've come. This is our weekly anchor. We've had a bit of a contraction lower, start to break out. Whoop, I should probably draw that a bit straighter. That's your entry there with your higher low, and we're going from contraction into expansion. We're expecting that to push through 11, and up she goes, so on and so forth. But just remember, if the way I always look at it with the weekly, if this is your weekly and we're going to start running out of steam, this could just fall short, a lower high on the weekly, and then you get into that major contraction on the weekly, which who knows how far it's going to track, how much heat's going to come out of the market, um, how much, and this is where I would not want to, I'd have to stop myself out and reassess it. When it's that late into a weekly trend, I'd always be stopping myself out rather than just holding it because you could hold it. And I've done that before with the smaller stocks. You're buying on the way up, you hold it, and it just does not look back. It goes all the way back down again. You're down 50%, and you're just sitting there, and it does nothing for the next year or so. I mean, I've still got a couple that are doing nothing at the moment. And then look at SAS, for instance. It's one I've had for a while, and I didn't stop myself out when I probably should have. Now I'm holding it at half price of what I bought it at. But something you always learn, and you learn the hard way. So yeah, this is I guess there is nothing whatsoever wrong with this one, John. I think it's quite nice, but you just got to know exactly where your risk is and what's happening on the longer term time frame too. Because if this starts to struggle at 11, then you got to flick back to the longer term time frame and think, okay, is this potentially a good sell off on the weekly, or are we going to have pull back from that 11 zone from the highs, hold another daily high or low, and then just blast up straight up and through it? Okay, and what are you prepared to do? How are you going to tackle that, and where your risk is going to be? Yeah, it looks pretty good. What was the next one? So we had a few more from, is it Magyar? Magyar? So SRG. SRG is the weekly. I kind of like that weekly chart. That's lifting. You had some good contraction here. So all in all, the way I would attack this one on the weekly basis is you've got sort of consolidation through here. You can see that. Then we've had the price lift. It's gone bang straight up. For whatever reason, you've got it pretty much going from say 60 cents up to $1.90. Was it? Yeah, $1.90 before we started contracting there and heading south. So that's really what we're doing there is just cleaning out a few of these late longs. You've got to put them back on the sidelines because, like I said, if there's only so many people that want to buy this. If you use 95% of traders have already bought in at this level, who's left on the sidelines to get into the market, to push it to new highs, to give you some more, to put you into profit or to give you some more profit. So you've always got to be looking at it from that perspective. And when there's not, that's when you get these little moves lower to clean out a few late buys. But then what it's done is probably only retraced 50% of that move up, built another high low, and then you can see we started to lift. Ideally, we're lifting off that. So you could have easily had a bit of a trade. For me, I would have gone buy. I'll make that cleaner for you. This is the zone I would have been interested in. That's not what I'm drawing, was it? That's the area for entry I'm ideally looking at. The lift off here doesn't mean anything up until you get your high low and then buy through your entry, buy through your highs there. Risk is there. At the moment, you're probably 1-to-1 and it's held a high low. So you can actually move your risk up to 150. You're not risking that much anymore, say 10 cents, as opposed to risking on the initial trade from 160 down to 130, 35 cents, for instance. Now you've minimized that to 10 cents and the market's still heading higher, holding higher lows. So this here, yeah, if you're looking for a spot where this could be moving to, you're really just going to add whatever the difference was there, 60 to $1.90, $1.30, add $1.30, say it's 250. So potentially this market's still got a bit of legs in it. This could easily go up to 250 and it's just the same length of leg up. Now, if we start failing earlier than that, it's not a great sign. If we start taking out, if we pull back from here and take out 160, okay, you probably want to get back out and just reassess it purely because something's not good. If this is a strong market, it should keep going higher. We should get more people dragged in, more people it comes on more people's radar, and then up she goes. All right. Is that Dav? Have I seen Amy? Yeah, so either way, SOG, it looks positive for me on the weekly, and the daily. That candle I don't like so much. Obviously, that rejection of 195, but it doesn't mean it can't hold in here at 180, and up she goes again. It is definitely, you know where your entry is, know where your risk is, and let it run, let it go. Right, SRG. What was the other one? Gem. We've traded that before. It's a buy recommendation. All right. So this is what I don't like about buy recommendations as such. It could have a buy recommendation, but again, for me, it always comes back down to how much you could buy it here. And I know you'd probably be right, down the track you'd be right, but how much time are you going to waste sitting in a stock that's not doing anything? And that's the biggest part of trading. I mean, not saying that you can't be profitable. You might be happy making 10%, 5% or 10% a year. You're beating the index. You're probably beating most fund managers. That's quite good, 15% a year. But if you want to try to refine your trading and increase, what am I trying to say? Increase the results and get more bang for your buck, make more money. You don't want to be sitting in trades that do nothing. So this is what I'm saying. To buy this down here, the trend is down. That daily trend is definitely down. It's probably coming to a point where it might be coming into a nice little buy zone, but look at that. Just as I said that, yeah, exactly what Dav said there. Gem is a low odds play. And looking at that weekly, I might just drill that back a bit. Looking at that weekly, had a good move up. Okay, good pullback. If you're buying into this little rally here, it's failed. It started to fail. Every time it went, it's failed. And it's just this move down, which has taken out pretty much that daily, that $3 zone. it's taken out the daily, that weekly support zone. That's not a good sign. So there's two things about this. Okay, it's coming down to and this is what we said before. This is overextended on the downside, and it's stayed there for the last 4 months. So this has been oversold for 4 months, and it's still heading down. So if you were looking to go, okay, I'm buying because it's oversold, and you buy it here, we could be looking at $1 in another few months. And then why would you want to get into something that's not rallying? It's actually going down on the daily. A weekly, it's going down. Why would you want to buy something just here uh, before it's even showing any signs of buyers starting to step into the market? Hope that makes sense, guys. Yeah, yeah. Look, it can, and I'm sure here it's good volume coming here. It's turned into favour buyers here. This green candle, same thing. You've got this green candle here, spike up in green volume, and then what happened to them? Squeeze back out of the market. So it, it is good to see volume, but it's always in context of the overall chart. Um, so first and foremost, I'm looking at price action. I'm never looking at volume. I'm never looking at stochastics. I'm never looking at this, that, and the other. Always looking purely at what do you get? What did I say? Price action. And then I'd start looking. Okay, what's stochastics doing? All right. So we've had a little pullback here. Say just in this zone here, we had a little pullback. That doesn't look too bad. At that stage, it didn't look too bad. Had a little pullback. We've gone to oversold. We can't get back down below 3. That's starting to look pretty good. I might be looking for a buy entry and then see if I can ride it up. In hindsight, didn't get too high before it fell over. And then I'll be looking for volume too. Okay, do we get a little pickup in volume on these green days? Okay, we did get a pickup in volume. Everything's looking quite good. But right now, even though you get a little bounce in volume, it could still mean that, this market could just keep heading lower. And if we just draw this up, I just want to quickly show what I'm talking about. And the reason why I've been taught by the man himself, Davin Clark. And we had a good chat, and he drills me sometimes. You do know, Dav, that you make me cry sometimes when you. Sorry, I'm starting to talk rubbish now. If you look from that high to low, and this is purely because we've broken through that support zone, and it's the same when you're looking for how far the market can go up. You're trying to extrapolate out, and you go, this leg here is equal to that leg up. Okay, up we go. You can use the same sort of tactics on the downside. You've gone from high to low. We tried to go up. We couldn't get much. Well, not there. We couldn't get much further than this high before sellers come back in, and then you're trying to look at what's that? 575, say down to 3, so it's 275. 275 takes us down to $2, which I think from 475. So, am I right? $2. So it's only a little bit further potentially. So we could be coming into a zone now where, okay, I want to see, maybe we're getting buys. So I might be looking at this, going, okay, it's in a zone from the weekly. I want to see some buying evidence, but you got to remember too, the amount of time. Look at that, the amount of time it's spent doing nothing. I would say it's a good part of 2 years, 2.5 years, going sideways. Essentially, had a little pop and then get sold off again. I think it's going to take a long time for it to repair itself. So, Jem, yeah, you could be right. You might go, I bought it here at just above 2. I took a bit of heat. I'm right, but how long did it take? 2 months to be right, or 6 years to be right? Yeah, that's what you got to really try to assess from the charts and assess. And if it does bounce straight back up like that, that's very rare. I'm not willing to bank a trade to think that it's going to bounce like that because it's a very low probability trade. But yeah, all right, I've banged on quite a bit about that, haven't I? Another example, hard to pick bottoms. TLS, exactly. We've been we were oh god, I wish I was still short. We were short this for quite a while, and I don't remember where. And I think we got out somewhere at 4. So this would have been another one to keep. You just continue to head short. The market popped up here. Only got so far as 380 before it's going from overbought to oversold. So you can see that the pressure from the buying to start, it really pressured it, couldn't go anywhere. Sellers were still in control, made another lower high and kept heading south. So if you're trying to pick bottoms, you can see how many times you've been wrong if you're picking bottoms. You're wrong here, you're wrong here, you're wrong here. Potentially you could be wrong again. Sooner or later, if you're if you're picking a bottom, you're going to get it right. It's going to bounce, but is that a good way to trade? You want to make sure, like I said before, you want to get on the right side of the market when it's lifting rather than trying to pick a bottom on the way down. And to be honest, I can tell you a story trading the Dow. The market was rallying. I went and sold it about twice, got it wrong, and that was when it was a trending session. This is intraday. It was a trending session up, and I think I might have. This is back in the day when I was on the forum with Dav. I don't think I showed him these charts because I was quite embarrassed. It headed, it headed up. I was starting to pick a top. I sold it, got stopped out. Sold it, got stopped out. Even when I bought it, when it did pull back, I tried to buy it. I took a 4 or 5 point profit, and then I took another 3 losses after that through selling it again and through sheer stupidity because I got angry. I'm trying to fight the market. I'm trying to pick a top until I had to give up with some good losses for the session. Just looking at it, going, why did you do that? And that's from trying to trade from ego basis rather than from a technical perspective. Anyway, so not having to go at anyone here, I'm just trying to point out that when you're seeing something like analyst recommendations, I don't trade from analysts ever. I'd like to look at them, read to what they're doing, but I don't think they're the best traders, to be honest. What was the other one? Jim, what else? NTU. So they won for one, aren't they? So to me, this is starting to look a little bit better. I mean, are we on the weekly? We're on the weekly chart, but not completely better. I mean, this again is just trying to pick a bottom when it could be overextended. But who's to know that they've got news in the pipeline to head out that's not quite good. They've downgraded so you're working off what's already known to the market as a fundamentalist. What's known, the market's got salt down, so it's probably like Davin, we were talking about this before. The market will never go to fair value. It overkicks it. It overshoots the market on their upside or the downside. So it either goes well above on the way up, well above fair value, or on the way down, well below fair value. So if you're looking for the market's sort of overshot the market fair value, and they're looking at it going, okay, this is undervalued at the moment. Let's put a buy recommendation, and then you're only working off what you know, and then the company releases some more data saying, oh, look, something's not quite gone right, blah blah blah. We've had to, and then all of a sudden you're getting downgrades left, right, and centre. So all of a sudden fair value's gone down, and sellers come back into the market because they might have been buying it through here. They sell it straight back in. They overcook it on the downside a bit further. So that's what I think is the risk of looking at purely fundamentals, because nobody ever knows. All we can trade is what we see and what we read, whether it's fundamentals or technicals. Right? Did I just get sidetracked again? But this one, yeah, I'm sort of leaning. Look, I'm leaning both sides. I wouldn't buy this. Personally, I would not buy NTU right now. But at the same token, I wouldn't. If I bought it, this is probably the only area that I might have bought it. This little push up. It's grinding lower. And if I just draw up what I'm talking about, I don't like getting that chart. Where am I? Northern Minerals. Yep. All right. So you've got. Oh, I don't really want to draw this up. So you've got the markets just popped. Looking from left to right. It's pushed down, pushed up, pushed down, retested lows. It's washed out the highs, and then boom, we've gone straight back down again. Okay, we made new lows. So the buyers have to reassess it, but we haven't really from there. We haven't really broken out of this downtrend. The market's still heading south. This is your key level at 6 for this move down, and your anchor level. You can see. If I take it, I want to go right back. Bang. That's where I want. So market's headed south. You get a bit of a reaction higher, held a lower high, and then took out these lows. So now that's your line in the sand for sellers or for buyers. And then this is your anchor level really to that trend down. All right. So we've got a lot of room between the lows and the highs here to sort of retrace back up. And then maybe as you get towards that top end of that range, sellers start to come back in. They might be very negative for whatever reason on this stock, and start hammering the stock and hammering it lower. You don't know what's going to happen. All right, we've got a bit of a lift up here. Then what we're seeing now is these sort of the same sort of situation. There's two things. I don't mind it so much because you've got these green candles starting to come, a bit of acceleration, but it hasn't broken out of this contraction, and hasn't confirmed a higher low in respect to this 6 cent level. All right. So until it does that, I would ideally like to see it pop up through 12, So then you can show and it start and hold a high low right where it is maybe. And if it pops up and then you get this, then maybe you get this sort of 2 moves lower again, but to a higher low, and then look for a buy entry. And then that could be a legitimate buy. You know where your risk is. You've got the lows are put in place at 6. You've got a high low put in place. You've got contraction lower. You start to coming out of contraction, heading higher. And then really you're just assessing what's your first target. First target's 22. You get through that. Your next target's up to 29. So really, I wouldn't buy this just yet. I think it's still got a bit of work to do before I would happy jump in and look for an entry. At the moment, it could just be sitting on the radar, just going watching it, saying, okay, this is what I'm planning on happening. I'm planning on this may be coming. It might be a first sign of holding a higher low, but it's not out of contraction. I'm always looking for contraction into expansion. Get on the right side of the market when the market's going up rather than coming down. So that way, I don't like taking heat. I'm a very nervous kind of a guy, so I'd rather buy something when it's heading higher than buying on pullbacks. When it's heading south, and you could do that when you're loading up in a position, but horses for courses, I guess. So yeah, that one probably again, I would probably have that one on the radar. So what was the other one? Gem, I wouldn't be touching that just yet. And check AMP, hard to pick bottoms. Oh, look at this one. So here's a prime example, BLA. Does anyone know the story here? This is why you'd never try to pick a bottom. This just did not look back. It went basically broke 12, straight down to 3. So imagine if you bought it, oh, okay, this one's getting overcooked on the downside. I'm just going to buy 1150. It's broken support. I'm going to pick a bottom here. It's going to head higher. Where's your risk on that? You've got no place to place your risk, and you've got to know exactly a level to work off for your risk if you're going to be wrong. Now, at this stage, if you can take out these last few candles before it accelerated through 1150, if you bought it on this red candle here, I'll drill in on that. Whoops. And don't forget, this is a weekly chart. If you bought it on this red candle here, where are you going to place your risk? It's really hard to say because your risk is there. What I'm trying to say, you've got nowhere to place your risk. Your risk is not based on anything. It's not based on the market rising. So here, if you bought it on this green candle, I know where I'm going to place my risk. I bought it on a breakthrough 11, what's that, $10, break through these highs. My risk is just below $9 and the same on the way up. But on the way down, when it pulls back like that, you're just picking the bottom. You've got nowhere to place your risk level because these, pretty much don't come into, they don't come into play because they're getting wiped out. So these are getting attacked. The market's heading down into these support. So until you push down, pop up, build a higher low, then the higher low gives you an area to work your risk from, and then it heads higher. Just saw your comment. What have we've always said is if you pick, the only thing you get with picking bottoms is stinky fingers. Sorry if that's offended anyone, but I love that. It keeps me yeah. So with BLA, that was just they come out with some big fund manager or whatever come out with a short sell recommendation. They gave their fundamental analysis why it is, and anyone who's loaded in BLA, even who are they? The newspaper, the Fin Review, came out and said, "Nah, they shouldn't be able to do that because there's nothing wrong with it. BLA's good fundamentals, they're solid, blah blah blah. They're just trying to get the market short to load up and gain for this pullback." But as you can see, the market did pull back that initial reaction, and then the news came out that they were doing something wrong, which you're never going to know that. Looking at fundamentals or technicals, you're never going to know that. And then obviously that's where you got this big capitulation. The market's gone bang. They punished it from 12 down to $3. So really, you've got a $9 drop there. And if you were picking bottoms at 11.50 and you're still holding it, there's got to be something wrong. You've just got to take that hit. All right, and what was the other one? AMP, you said too. AMP, the same. Who's to know that they were doing something dodgy there? And if you're picking it, okay, I'm just going to buy it $5. I'm just going to pick the bottom there rather than wait for confirmation that it's heading back up again. I'm going to sit on the bid at $5. I'm a legend. This is just a pullback. Nothing's wrong with them. And then boom, from $5 down to 4. Well, it's only $1 really, but you've just lost 25% in a few days. And who knows how long this is going to recover? It could take another year to recover back to $5 to you, at least back to break even. Does that make sense there, guys? And that's pretty much our approach with any of our trading. There's times you're going to get it wrong. It's going to pop up and the market's lifting and then you get stopped out on a retracement. That happens. But more often than not, the probability is on your side rather than against you. The probability is on your side. I think if you're trying to pick bottoms, it's a 50-50. It's a flip of a coin. It's probably even less than that. But when you're buying, when the market's rallying, it's less, it's better odds. The odds are, you're putting the odds in your favor. All right? It might be 60, 70%. And then out of those 70, 30 that you're right. But out of those 70, obviously there's going to be a few that you're not right. But then when you are right, you just try to maximize that and try to minimize any losses. Now, what was the last one? Dave, you put up one, AMI. This has, what do they do? Aurora Metals. That weekly trend is up. Obviously, they gap down here. Maybe bad news. It's just been building. For me, that's looking, even though it's come right in, this is probably one just after everything we've said. Oh, all right. So you're just looking, I guess this comes down to what we were talking about on the ASX, on the XJO. Go down looking at all the charts just to get an idea of what are the major levels that are going to come into play. If you're looking this purely on a daily and you bought it, if you just click down, you bought it on the daily, oh, that's looking great. You go, looks, trend is up, I'm buying this. But what you don't, you drop it down a level, you go, oh, hang on a second. That resistance at 40 cents, is that going to prove to be resistance or is this just going to blow straight through that level? We don't know. And then take it one step back to see what the monthly's doing. The way I'll be looking at this, you've got markets come down into that 15 cent or 10 cent zone. It's worked its way off. We come back down into 10 cents from, well, we're pretty much gap down. So I'd say in the way it's retraced back up, I'm going to draw this properly. Take those two lines out. So that's your next level. It's pushed right back and then it sort of gap below. So we've had a big wash out of 10 cents and then it started lifting again. So this was your next level at around 40 to 45 cents that we probably have to be concerned with. But the way it's come up into that level, it was quite good. So that the monthly, don't forget, if the monthly just rolls over, I know it's into that sort of overbought zone, but the fact that it's a monthly, overbought on a monthly and overbought on a 30-minute chart are two completely different things. One's a lot faster. Is going to happen. The rollover could happen a lot faster. On a monthly, this market could just keep going higher before it actually starts rolling over. Does that make sense? So really, it comes down to what levels we're looking at. So the monthly is coming up into a good level. All right, so you start looking at down into the weekly. All right, it's a good level, but let's start assessing this latest price action. Even on the weekly, for me, it's showing some not bad signs because you got this rally up, maybe a bit of reversion to the mean back here, but you've got higher lows holding, higher lows, higher low. This is the high low here. You've just got it pop up. We might find a bit of selling up here, which you would expect being a key level, just around 42. Profit taken from either here, here, or here. You might want to lock in some. So there's probably going to be a bit of profit taken up there, but look at it. The selling pressure is quite good, but it's holding up. You can see that. It's just starting to hold up. So there we'd have to drop it down to the daily and go, oh, okay. Buyers are happy to step in, even though it's in this resistance zone, or it's right coming into the resistance zone at 40. So then you've got to start looking at it thinking, oh, we're just going to blast straight through it. Are we not going to look back? What's happening here? Because the sellers are putting in a valiant effort to push it lower, potentially like they did here. We pushed it lower and then it turned around and did this, bang, straight back up. So what's to say that we're doing the same thing? Sellers are putting in an effort to push it lower. It's not getting too far. It only got so far as 34. And then what's to say we can't just go blast off? So if you go from 22 up to, say, 42, 20-cent rally to 54. And there's a lot of fat in that trade if that's the case. So going down to your daily, and we are still holding high lows, so there's not much to talk about there. You could pop up, pull back, high low, and then bang, off you got your entry, and away we go. That's it. Thank you very much, Helen. Just saw that there. Right, so hope I was along the right track there, Dad. I just had lunch. You're missing out on the chat. We miss you, Helen. What was it? SEA for Lauren. So SEA is one that we had in our chat. Obviously, looking at this, there's probably just one thing I want to say. Well, essentially, one thing I want to say at this. This is always back again. It comes back to looking back a chart. The daily, okay, you're probably getting a bit of a lift here, but is it a lift or is we just coming into we come into a resistance zone before we get sold back down again? And it does nothing because this is just because we had a rally from 6 cents up to through 10 cents doesn't mean it's going to lift because we've got a high low here. It doesn't mean anything. We might get a rally up and do nothing and make a lower high, and then everyone's sort of sitting there waiting. You buy it late into the trend, who knows? But looking at here, so that's probably your key anchor. You can see popped up, pull back, popped up, pull back. That's your latest higher low. And then we just got this extension straight up through 10 cents. And then we failed all the way back down to the anchor again, even, just retesting that anchor. So for me here, that's essentially lifting. It's just pulling back now. Maybe you can buy it on a move up through those highs, but your risk has got to be below around 6 cents and just see what happens from there. But if you take a step back, I don't like the way it pulled back. If this was a strong market, I would not have expected a pullback from 11 like that. I would have maybe expected something back to more a 50% retracement of that leg up, somewhere around here, and start to hold your higher lows again and work its way back up and start extending and really get that longer term trend happening rather than this extension up and fail all the way back down to the starting point at 5.5 cents. So if you take one step back on the weekly chart, you can see this is not so strong. That weekly trend is still lower. And whether I don't know what's going on with SE Sundance. We could just be capped at 10 cents for the next, well, how long was that? 17, the next year or so. So looking at that weekly, is it worth parking your money into that trade and it do nothing for the next year? All right. So that's all, I guess, with that one. It's interesting just to look at the different chart, the different time frames. Obviously you want to go back. Next thing you probably look back is just, see what it is doing fundamentally. What's happened? Are they doing nothing? Does it look good? Does it look bad? Have they got something on the horizon that they're waiting for? And then you get this blast off, and then up she goes, and away we go. But really, your key level is sort of up till 20 and 10. Your next level is up at 10 cents. So if we hold another lower high in the daily below that 10-cent mark, which is this move up here, and that's why that puts that move down more in context because the weekly trend is down. So really, we may have a bit of a lift up here. It may fall short at 8 cents. It may just struggle. It may be very, a real struggle of a trend up and then start to get a heavy selling off again, back down through 5, right back down to, say, 4.5 cents. Who knows? Yeah. Thank you, Helen. You had to remind me. So we were looking at, I think it was myself and on the forum, we're looking for a bit of a short in here. And the reasoning for the short, you can see that big move up, big correction. We pushed back up. We got a double top, essentially double top before we started failing again. If I just draw that up quickly. So this is your weekly basis. You can probably look at it on a daily too. Double top in here. We've had a good correction. We pushed up, had a pullback. If that was a strong market, we shouldn't have fallen short and made another double top. So essentially we pushed back up. We've had that secondary move down. I was essentially looking for a short through here. Instead, something come out, bang, up she goes. So that pretty much took the short off the cards. We forgot all about it since then. But who's always going to remind me? Helen, constantly putting that up in the channel. Anyway, guys, might have to finish it up there before I get bagged a little bit more. But, thanks very much for joining me. This is the best time when we have a delay. I can just finish it up before anyone says anything else. But yeah, thanks for joining me, guys. That was a good little session. I enjoyed it. Hope you did. Hope you got a lot out of it. Just remember, if you do have any questions, if there's something you want to ask, a chart you want to do, or something you just want to have a chat about, just send us an email to support@tradesetup.com.au, and then we'll get onto it. But yeah, thanks for joining us, and thanks for Magyar. Thank you very much for those charts too. I think it was a great talking point. It was good fun. I'm always happy to bag an analyst. Anyway, thanks guys. We'll speak to you again on Monday. Have a great weekend. Cheers. Bye.